I think we're good. We're going to bring John in and see how he's doing.
All right. I'm assuming you can hear me.
Yeah, John, how you doing?
I'm doing pretty good. I don't have my cam enabled, but
Okay,
I did
perfect,
not get your questions, so I'm going to respond to them on the fly.
Okay, perfect. Yeah, I was lazy. I ended up leaving work a little bit later than I wanted, so I apologize that I never ended up getting you the questions. But really what I wanted to quickly ask you is, first and foremost, thanks for coming on the show. You're the first person to really come on to Let's Talk Money, and a random person at that. I think you're actually the first person I've ever had bringing on a live stream at all. So the fact that you are a stranger, not to the YouTube community, you're not a YouTube creator, I think will be very interesting to bring into the community, and I think other people will probably end up doing it as well. But I'm really curious I guess how long you've been following me, or is this kind of a recent time that you've been following me?
Okay, so I've been following you for, I want to say, about 7 or 8 months.
Okay, cool.
I watch PPC Ian and Joseph Carlson as well.
They're good, yeah.
And I used to watch Dividend Grinder. Rest in peace, buddy.
Yeah. I'm still waiting for him to get him on, me on his podcast.
I thought his videos were super entertaining because of his personality.
Yeah.
Maybe that's just I don't know, but I'm sad he's not making videos anymore.
Me too.
I do still follow him on Twitter, so I do get some of his gambling sass.
Yeah.
So I started watching you about 7 or 8 months ago. My prior stock experience was semi-limited, but I basically I'm very blessed to be in the situation that I am now because my wife and I both grew up very, very poor, and we're from different countries, which makes it kind of interesting.
So are you in the U.S. or?
I am in the U.S. and she is also in the U.S. now, but she was not born in the U.S. So we grew up from 2 different parts of the world and very, very different, but very poor. We're in a very, very wild, almost unimaginable scenario. So that's part of what my questions for you are going to be once you're done.
Yeah, I mean, we could take it either way. I'm more than happy to ask you questions, or if you want, we can talk, and have a good conversation. I'm more than happy to do it.
I want to know what your questions are first. So I'm super curious what your questions are.
Well, my questions are going to be very standard, like, how far along are you in your investment journey? What's your risk tolerance? Are you very passive, active in investing? Just kind of going along the initial 5 kind of questions that I always ask people when they are first getting involved in investing.
Okay, so
to see where you are and how financially into the journey, what your mindset kind of is in finance.
Okay, so I started, like I said, I grew up very, very poor. I did graduate high school. I've been to college 3 times, but don't have a degree. I do have certificates, but I've changed careers multiple times. But I knew growing up, because my mother raised me as a single mom, that I always wanted to own real estate. So at 24 years old, I did a lease purchase option in 2002 on a condominium. And then I ended up purchasing that condo 2 years later. And I've had that for 15 years now, and that's been paid off for 12 years. And when I got into that, I was really lucky because the broker that I worked with on the deal, it was a situation where someone needed to get out of the property, and I just kind of took it over. So it's basically what's considered a mortgage wrap, where you just kind of take over the existing loan on the property and then you pay it down. So I knew that I wanted a place to live where I was going to settle down, and I thought I was going to go into a computer networking degree, finish the degree, and then go into networking. And that was just, I was going to be set. I was going to have a place to live. And then my wife kind of changed that entire direction, and I've moved around the country a little bit, a couple times since then. But
was that to follow your career, or?
Yeah, so I worked basically in support for a software development company, and she works in development in software development. So she's on the dev side of the business, in high-end project management, and release software management. So doing like platform work and things like that. And then I was on the opposite side of the spectrum, doing the like customer facing side of the business and a lot of auditing work to make sure that, the customers were taken care of by the business. So I kind of gave up my career about 8 years ago, to allow her to follow and build off of her career. And I went into full-time real estate investment and
That's
property
awesome.
management.
So
So,
do you utilize the lease to own option a lot now, because that's
okay.
kind of how you got started?
So it's super interesting. And I started in 2002 with that first lease. I actually took it over and bought it in 2004. The market crashed in 2008, but I moved for work, from the state that I was in to a neighboring state. And I purchased a foreclosure property that was purchased by an investor who bought up a whole bunch of brand new houses that had just been built in 2005. And he did the little to no money down. Basically, he only put about 25% down as an investment loan. And when the market crashed, he lost about 50% of the value on the properties.
Wow. Yeah.
So he basically short sold the properties, and that was the second property that I purchased. So I walked into that property knowing that it had just been built, and I had a little bit of real estate experience, but I purchased that property just putting 20% down.
Wow.
But because it was a short sale, it was basically the bank has approved the property to be sold at a very low amount compared to what the original loan was. But it was enough that he squeaked away from it with only getting about $20,000 to the bank to get out from under the loan entirely after it sold. But I knew walking into the property, because it was like a model home for the builder, they put upgrades into it. So I walked into the property knowing that there were about $40,000 to $50,000 worth of upgrades on the property.
Oh, wow.
That I knew that if I held it long enough, it wouldn't matter what the market was doing in 2008. So I got into that, and I house hacked that by having my roommates from work, from the new job that I had just gotten in a new state. Basically, I lived in that house for free, and I just chunked the mortgage down, doubling to tripling what the mortgage payment was. And we paid that property off in 2015. So it took 7 years to pay that off.
And are you going into equity? Are you pulling out equity to purchase more properties, or?
Okay, so I'll get to that in a minute.
Yeah.
So my wife took a job, and we moved halfway across the country from where we were. And they gave her an equity offer. And this is like, we both had 401ks. I was solid contributing to it. And I set her up to do literally maxing it out, because where we were living, the rent was obviously, we all lived together in that property for a while, and it was super cheap for us, almost non-existent in actual cost. Just utilities were literally what we were paying. So when the opportunity came up, I left my job and we pursued this avenue with an equity option. And in 2015, we paid off the other property, but we moved in 2012. I rented that house out to the people who were literally there, and they're still in the property now. But when we moved, we took an equity option that I don't know that I necessarily understood what was going to happen, but the company ended up being really successful in getting sold.
Wow.
And in December of 2015, those options that we had just literally been given a couple years beforehand, all of a sudden actually had real stock value.
Yeah.
And part of it was immediately cashed out, and then part of it was doled out in the new company's shares. So that leads into one of my questions for you, is going to be like, we now have this ridiculous nest egg that we didn't have before in stock in a company that unfortunately is super downtrodden in the market right now due to the political uh, ambiguity that's kind of up in the air with our current, American political leaders. So that stock is, to me, it's beat up. And I read, the Morningstar reports. I read, Seeking Alpha because of, your channel and Joseph Carlson, and PPC Ian kind of leading me into actually digging into the stocks that I want to own and stuff like that. But everyone says that the stock is undervalued by like 30 to 40%. And I believe it is as well. The problem for me is that it pays almost a really pathetic dividend, which I really want to be a dividend investor. And that's kind of where my mindset is that I want dividend growth over the years that we're going to be working, because we're a little bit older. We're 40, and we don't want to work for the next 25 years. And we would like to retire within the next 10 to 15 years and have a really comfortable living experience. So when the payout happened in 2015, we took a chunk of that and we bought another condominium in the same area in Port of the World that I already had one in, because I knew that market, and it had done really, really well for me over 10 years prior. So we bought that outright with no mortgage on it. And they're not expensive. They're what I would call below the median housing for the United States. So we bought that's the third property that we had. And we paid off the house. And I realized that I had a huge learning mistake in paying it off, because investment properties give you tangible benefits to your tax bracket when we're now in a much higher income bracket than we've ever been before. And we pay like 40% or more in taxes.
Wow. So you're living in not only
we're living in a high tax state, in a higher tax bracket now than either one of us have ever been.
Okay.
And we try to pull that down, but I do all of my work. I don't have like a traditional 401k I can contribute to anymore. I am, this past year, as of 2018, I started doing the backdoor Roth IRA. So I'm trying to get that all rolled over and converted properly, and learning that process just because of the tax brackets that we're in. I don't know if our income is always going to be this, but it has been this for the past like 3 years.
Wow.
So it's not having a whole bunch of
problem to be in, man. Tough problem. I mean, it's a good problem to be having.
It's a great problem to have, but no one in my family has ever had money, and my parents were not financially literate at all. Always living paycheck to paycheck, always buying cars that they couldn't afford. Like my grandfather made fun of my mother all the time, saying that she lived a champagne lifestyle on a beer budget.
My parents called it something different. Well, people in my family have called it different name, but very similar. Yeah.
So ultimately, we have that stock, and that's all vested now, and we've obviously had that for more than the 1 year. So if we sold it, we would only be paying the capital gains tax. However, if we sold it or did anything with it right now, we would also pay, heavily state income side as well. So we pay tax there, then pay federal. And because of the way the market is right now, I don't really want to take out anything from that. However, what I did this year was I realized the mistake that I had kind of made by paying off the properties and not just holding the mortgage to use that on an investment property. We would get to reduce our taxable income for the property taxes, all the expenses for it, any maintenance, repairs, all of that stuff. It all reduces our income. So I talked with my CPA this past year in April, and I was like, we're at the point where we could do a cash out refinance, and it's an investment property with an investment loan, and if I paid down the interest rate by buying a point off of it to get it at 4.5%. And then I pulled out more from the property than we ever put into it, by about 30,000 over what we paid for the property originally. So I had this bundle of money, and I've been rolling a huge chunk of it into stock because I'm shopping for the next property, but I knew that I was not going to spend the total amount of money on one property. So I wanted to get the ball rolling and figure out what type of stock investor I wanted to be. And I've kind of channeled that off of PPCE and advice, and using a platform to kind of build off of and jump from there. And I've been dollar cost averaging it because I'm learning enough about stock and the positions, and I've seen the way that you buy and the way that everyone seems to be consistently just buying for the YouTubers. The way that they just seem to all operate is everyone seems to think that that's the best way to go.
It's consistently buy. So for me, so I guess my thought process is I'm only 28, so I have a little bit longer of a time horizon. And so even if we do have a year or two of downtime in the market, it's going to be relatively short-lived comparing to my time horizon that I'll be investing in the market. So for me, I'm still hoping to be investing, say, 40-50% of my income year over year. And so yes, in the short term, I'll probably lose money on paper, but what I'm actually aiming for is the dividend income that kind of comes through, rather than the actual total value of the portfolio. And so I was going to ask you a clarifying question, and then unfortunately, before I got some other folks starting to join us as well that are I told to join us at around 8 p.m. Eastern. But before we jump, I wanted to ask the folks in the live stream to ask a couple questions for John before I move on to either Jesse or David. I have to figure out which one I asked to come first. But John, my question for you is, are you looking more for a total value number or a passive income? Or maybe not, a passive is not the right term because real estate is far from passive, but are you looking for a cash flow monthly sort of number?
So my goal is to get to about $6,000 a month in income coming in. And right now, between all of the real estate investments that are paid off, it's right about $1,800 a month just from that. Now from stock, because of the way that it's kind of worked out, right now we're only at about $300 a month from stock. But right now, like, I'm in a similar situation to you where I'm trying to figure out how much we can save every month, and I'm trying to deploy I would say my goal is to do $1,000 a week in just into stock alone, while I'm also trying to buy another additional property.
So you said 1,000 a week?
Yeah, right now we've averaged 1,000 a week since April.
So 1,000 a week. So let's just take, for instance, you do 1,000 a week, you're investing at about 4%. So every year you're getting about 160 or so every month you're getting about 160 or so, maybe more, of income being generated if you're investing at about 4%. I don't know what your target dividend rate is, or if you even have one.
So right now I'm right at about 4%.
Okay. So yeah, if you just keep doing that within a year or so, well, I guess the way I would put it is you're buying like about, what is it? Is that close to $14 or $15 a month in income? Maybe it's closer to $13 a month in income every month, if that makes sense. So you do that for a year, you're probably going to buy yourself, close to $150 a month in income. And the way that I look at it is, it might start off small, just like mine did, but I was probably around what you were doing, and maybe even still, we're probably pretty comparable to how much we're investing monthly. But that $4,000 a month, man, that just builds. And the way I look at it is, at this point, I'm up to just under $1,000 a month, and I've been doing it for 4 or 5 years, I guess now, like very heavily at the rate that I've kind of been doing it. So if you continue on that path, plus you're doing the real estate, I mean, I'm sure you'll do well, and especially if we end up with some sort of downturn in the near term. Say if we go down by 20-30%, you're just going to be able to purchase more stock, and I think that is, you're going about it the right way. In my opinion, is you're following the right people. I love PPCE, and he's one of the folks that I follow most. So if you seem extremely financially educated in terms of, yes, you might be doing real estate. I more so focus on the stock world. So I'd love to talk to you more about the real estate aspect of things, because I also want to get to that point as well. But yeah, I mean, I don't necessarily know what I can really help you with. It seems like you're really doing what you need to be doing. I guess, do you have any specific questions?
So I think my specific question is would you move a foreign position if it was, so right now that position alone is about 80% of our entire stock portfolio outside of 401k. So like I said, we're at about 100,000 in just the current stock portfolio that I've done this year. So I'm trying to figure out if it's a better play to diversify more of that income or more of that stock specifically as soon as it reaches like a certain threshold. And then just, would you trickle that money in afterwards? Say, $200,000. Would you trickle it in afterwards and just dollar cost average in like 20,000 a month? Or would you kind of do a smaller amount, like 5,000 a month, until you see a dip, if a dip even occurs next year?
So I guess you lost me briefly. So you're saying the equity that you guys got in the company that you work for is about 80% of the portfolio?
Yes. So
Okay.
right now, of all the stock that we hold, that's 80% of the total value.
Yeah. And
So,
you said it has a very minimal dividend as well. And
yeah,
it's
it has
obviously a tech company.
Yeah.
Wow. Yeah, I mean, it's tough to say. I mean, like you said, you kind of have a want for it to be higher value, but at the same time, like Lydia Santiago saying, 80% of that, is pretty scary if that's really what the total position is worth. And yes, while you might be potentially losing out, you could also think of it as, if you were to move that, like you said, that 80% value, say, into something that was yielding around 4%, how much closer does that get you to your goal? And yes, you might lose potential upside if you're thinking about it that way, but your true goal is, like you said, 6,000 a month. If you're able to move that 80% in that one stock and, get you 1,500 a month, I mean, on average, I mean, that, in my opinion, would be awesome. I mean, it sounds like that's probably close to what it would be. I mean, you have a pretty big portfolio at this point. And if you were to move that single stock position into something that yields a lot more, I'd hate to say sell it and then eventually, like, you know what I mean? Like it goes up crazily.
So that's the thing. It was up in the like $60-$70 range, and then it's, because of the political drama, down, about half the value right now.
Mm-hmm.
So if it went back up rapidly, that's the kind of thing that I am like kind of concerned with. And we've kind of discussed like a number that if it got to that, we would want to sell a bunch to diversify it. But selling it basically means whatever year we do the sale in, we're going to eat 15% of that, in a tax burden.
Yeah. It's not Skyworks Solutions, is it?
No.
Okay. I was about to say, I used to be invested in Skyworks Solutions, but anyway, yeah, it's a tough one to say, but I think what ultimately you need to look at is you kind of have your goal, and unfortunately, that goal is hopefully what dictates what you want to do. But yeah, like you said, I mean, I don't necessarily think I would do $20,000 tranches. I think that's pretty scary. But
so would you go something like 5 then, or
every month?
Wow. Yeah, like 5 in addition to what I'm currently doing. of like 4,000 in a month, because 4,000 is just general, like that's the real estate income, because we don't use that. We're just redeploying that into
Right.
stock specifically. So
Yeah.
I'm trying to shift all of my income that I earn into stock and trying to save as much as possible.
Mm.
So like that's the kind of struggle that I'm having, because a lot of the channels that I listen to, like they're relatively, yours is one of the largest revealed portfolios, and that's really why I wanted to come on here and ask you about it.
Until Gen X dividend investor shows us all. Um, let's see. Yeah, I mean, I don't think either way. If you do that either way, you're not gonna lose cash flow, but you might lose capital gain upside. And so I would hate to tell you to sell, but I think you already know that, and I think that that's why you're asking the question. Because you know that selling might be losing capital gain upside, but you understand that you're wanting to do dividend investing. But yeah, if I personally would lean on the slower approach of maybe not doing 20,000 a year or 20,000 a month. Sorry, but 5,000 a month, because it is a very significant position. I mean, it's 80% of the value of the portfolio, so that's scary to me. Granted, I know it's sad to see something that potentially might be undervalued, but if your true goal is cash flow, then in my opinion, I would go for the cash flow. And it's only going to get more and more. I guess the dividend growth is only going to get more and more. Like for me, if I match what I did last year in terms of dividend growth, just on its own with reinvesting dividends and dividend growth, I'm going to get over like $1,200 extra in terms of dividends, not just gains in the portfolio, but actual dividend income. If I were not to invest any more money right now in 2021, my dividend growth would probably be an additional $1,200 just that year. So I mean, it starts getting pretty significant, and that ends up being $100 a month with it just growing on top of itself. You know what I mean? So you're not doing anything wrong. So it's very difficult to tell you to steer you in a different direction. So I apologize if it's kind of wavering.
No, I mean, it's really interesting to like hear your perspective, because, like I said, nobody in my family's ever had money. And we hide, the amount of money that we make from our families, because it's problematic. Family and money don't mix, nor
They
does
don't.
letting family stay in rental properties. I've learned that lesson the hard way too.
Yeah.
So I appreciate your time and getting to talk with you, and I hope to get to chat with you some more down the line.
Yeah, I mean, I'm very interested. I'd love to have you on for a whole hour, maybe in the future. So definitely keep in touch. Very interesting conversation, but unfortunately, I have Jesse waiting here. I think I have him. I don't know if there's any big questions that kind of came out here. Let me just double check. A lot of people are asking, or if you're in New York or California. I don't know how comfortable you are answering, but there was one or two people asking that question.
So not from either one of those, but yes, we do.
Living
We
in
currently reside in California.
Yeah, so in the high income
So,
tax bracket, you're paying probably close to 12% in state income tax. So that's
yep.
pretty absurd.
Yeah. So it hurts. Every tax season really hurts, and like trying to find ways to bring it down are absolutely like kind of critical for me. I've learned a lot about, like, first thing was hiring a CPA.
Yeah.
Like a CPA is already going to save you so much.
Yeah. I mean, in your particular case, any dollar of depreciation you can get, is basically $2, because you're able to write 50% of it off. You know what I mean? Or any sort of value you're able to invest, you're basically getting $2 worth of an investment, just based off the fact that you're able to write off however much of that dollar. I mean, that's insane. 50 odd percent taxes is pretty pretty wild. I don't know how we ever got to that. But Lydia also had her, and Lydia is a good YouTube creator as well. She focuses on. She used to do Robinhood, but she switched recently. I forget what one she switched to recently, but she said that if your dividend capital appreciation, if your goal is dividend, then the capital appreciation of the portfolio is a little bit less important, which is kind of my philosophy. A lot of people are like, what's your end goal? And it's like, my end goal is a dividend goal. It's not a capital total portfolio value. But a lot of people don't think that way. They always generally think, oh, I need $2 million. I need $3 million. I think about the way that you're doing it, 6,000 a month, 5,000 a month. That's the goal that I'm chasing. So.
Yeah, I know for a fact that, we don't drive fancy cars. We drive 8-year-old vehicles, stuff like that. Our expenses, even in retirement, aren't going to be that high, and we're not going to retire in California or New York.
Yeah.
So that's just kind of the way that it is. Those numbers are realistic figures that I know that we could live very comfortably on. So that's why that number is the way it is.
Wow. Well, I really appreciate you stopping by, John. And I will reach out to you to see when we can get more of and if you'd like to reveal your face, that's fine in the future. Don't feel obligated, though. I had a great time talking to you. And even just, talking about real estate, even off camera, I'd be more than happy to get your opinion, because you seem like you know what you're doing, and would love to hear your coaching. We can coach each other if you don't mind.
Absolutely. That would be fantastic.
That'd be a great relationship. Thank you, sir. Appreciate it.
Yep.
All right. Cheers.
Good night.